I want you to do something for me right now. Go ahead, look at your hand, open your palm. Now, picture placing a single silver coin right there in the center. It's just 1 ounce. Small enough to flip like a quarter, light enough that you'd forget it's even in your pocket. Now, I want you to imagine something else. 42 gallons of crude oil, 1 full barrel. The black gold that fuels every single airplane crossing the sky, every truck delivering your groceries, every ship carrying global trade. It is the single most important commodity in human civilization. Here's the thing that's hiding in plain sight. That tiny coin in your palm now costs more than that entire barrel of oil. 1 ounce of silver is more expensive than 42 gallons of the liquid that runs the world. This is not normal. This is not supposed to happen. And yet, here we are. The mainstream financial media isn't covering this. CNBC isn't talking about it. Bloomberg isn't analyzing it. This comparison is hiding right in front of everyone's eyes. Welcome to Hidden Wealth. Today, I'm exposing a price signal so significant that once you understand it, you will never look at value the same way again. Let me show you what they're missing. Let me break down the exact numbers so you can verify this for yourself. No secrets, no speculation, just data hiding in plain sight. Right now, silver is trading in the approximate range of $75 to $85 per ounce. Of course, this fluctuates daily based on market conditions. Crude oil, specifically WTI, has been trading at approximately $65 to $78 per barrel during the same period. Do the math yourself. At many points recently, silver has exceeded oil. 1 ounce versus 1 barrel, the coin wins. Let me help you visualize what 1 barrel of oil actually represents. 42 gallons of crude can be refined into roughly 19 gallons of gasoline. That's enough fuel to drive an average car about 500 miles. That same barrel also produces diesel fuel, jet fuel, heating oil, asphalt, lubricants, and the base chemicals for plastics, fertilizers, and even pharmaceuticals. 1 barrel of oil touches virtually everything in modern life. Now, let's consider that 1 ounce of silver. It can be pressed into a coin. It could be used to manufacture the electrical contacts for maybe 100 light switches. It could provide the conductive paste for perhaps 5 solar cells, or it can just sit in a safe for generations. Silver is valuable and silver is useful, but silver doesn't transport your food. It doesn't heat your home. It doesn't fly passengers across oceans, yet the market now prices them almost equally. One of our viewers recently left a comment that stopped me cold. He wrote, quote, "Currently, an ounce of silver is higher in price than a barrel of oil." Think about that. So I thought about it. I thought about it for 3 days straight. And the more I considered this comparison, the more I realized that something profound is being communicated through these prices. Markets are not random. Prices are signals. When millions of buyers and sellers collectively price a pocket-sized piece of metal equal to civilization's primary fuel source, they're saying something important. The real question is, what exactly are they saying? I've identified 3 possible interpretations. Each one reveals something hidden about where we might be heading. And the third one might just change how you think about value entirely. First, let's look at hidden meaning number 1. Silver's true value is finally emerging. For decades, silver has arguably been the most undervalued commodity on Earth relative to its actual properties. Let me show you what I mean. Silver has the highest electrical conductivity of any element in existence. Nothing conducts electricity better. Not copper, not gold, nothing. Silver also has the highest thermal conductivity of any metal. It transfers heat more efficiently than anything else known to science. On top of that, silver has natural antibacterial, antiviral, and antifungal properties. It literally kills pathogens on contact, which is why it's used in wound dressings, water purification, and medical equipment. Silver is also absolutely essential for solar panels. The photovoltaic industry now consumes over 150 million ounces every single year, and solar installation is growing exponentially worldwide. And it doesn't stop there. Silver is inside every smartphone you've ever owned. Every computer, every electric vehicle, every piece of modern electronics contains silver because nothing else works as well. Thanks for watching. And be sure to subscribe so you don't miss the next part where we dive even deeper. Here's the hidden truth that most people completely miss. Unlike oil, which disappears forever when you burn it, the silver used in our electronics and countless industrial applications is often unrecoverable. It's used in such tiny microscopic amounts that it's simply not economical to recycle it. So that silver effectively vanishes from the world's accessible supply. Decades of this industrial consumption have drained the above-ground stockpiles. At the same time, mine production is flatlined, the quality of ore is declining, and finding new, rich deposits is becoming incredibly rare. If this interpretation is correct, the market is finally waking up to a reality that's been hidden for years. Silver's genuine scarcity and its irreplaceable utility are starting to demand a much higher valuation. Now for the second hidden meaning, which flips the focus from silver to oil. Something fundamental is shifting in the global energy markets. The transition to new energy sources isn't just a theory anymore. It's actually happening. Solar installations are shattering records. Electric vehicle sales are accelerating faster than anyone predicted. Governments all over the world are implementing aggressive policies to reduce carbon emissions. And the money is following. Capital is flowing away from fossil fuels. Investment in new oil production has dropped significantly, and major institutions are divesting from petroleum companies. Whether you're for or against this transition, or whether you think it's happening too fast or too slow, the direction is undeniable. The world is gradually moving away from its dependence on oil, and markets are always looking forward. They don't just price today's reality, they price the expected future. So if investors believe that oil demand will peak and then decline over the next 20 to 30 years, that belief gets baked into today's price. Oil might be essential right now, but if the market thinks it will be less essential tomorrow, its price today reflects that doubt. Meanwhile, oil supply remains relatively abundant. U.S. shale production changed the game, OPEC manages its output to keep prices stable, and inventory levels are manageable. So you have a comfortable supply plus a questioned future demand, and that equals moderated prices. If this interpretation is right, oil isn't being undervalued. It's being discounted because the market is pricing in a very different future. But it's the third interpretation that really got me thinking for days. What if both of these dynamics are happening at the same time? Together, they might reveal something profound about how we, as a society, are starting to reconceptualize the very idea of value. Think about what oil represents philosophically. Oil is consumption. You extract it, you burn it, and it's gone. The value is immediate, but it's temporary. Once it's used, you need more. Now, consider what silver represents. Silver is preservation. You acquire it, you hold it, and it remains. Its value is lasting. It doesn't just disappear, it can be transferred across generations. What we might be seeing is the market reaching a point where preservation is valued just as highly as consumption, where lasting assets are being priced on par with temporary utility. This is a massive philosophical shift. For a century, our entire economic model was driven by consumption. Growth meant using more, progress meant burning more, wealth meant spending more. But something is changing, slowly, hidden from the mainstream headlines. People are starting to question the idea of infinite consumption. They're valuing preservation. They're seeking assets that endure, rather than assets that just disappear. This silver oil crossover might be a signal of this much deeper shift. It's not just about commodity prices. It could be about a change in how we think about value, time, and permanence. That's the real hidden message here. To understand just how rare and significant this moment is, let me give you some historical context that most analysts overlook. For almost all of modern history, the price of oil has dramatically exceeded the price of silver. During the oil crisis of the 1970s, crude oil prices spiked to levels that dwarfed silver, even during a decade when silver itself was rising sharply. In 2008, oil hit $147 a barrel, while silver was trading around $15 to $18 an ounce. Oil cost roughly 8 to 10 times more than silver. Then, in 2011, when silver had that famous spike to nearly $50 an ounce, oil was still over $100 a barrel, more than double the price of silver. Throughout the 2010s, despite all the volatility, oil consistently remained well above silver on a per-unit basis. The crossover we are witnessing right now is historically extraordinary. It's a signal that demands our attention. Thanks for watching, and don't forget to subscribe for more insights. Yes, there have been brief anomalous moments. The 2020 COVID crash briefly sent oil futures negative, something unprecedented in history. But those were temporary dislocations, not sustained conditions. What appears different about the current crossover is the structural nature of the underlying factors. The energy transition wasn't a serious market consideration in previous eras. Industrial silver demand from solar wasn't a factor. Electric vehicle growth wasn't a factor. These fundamental supply-demand dynamics in both markets have evolved significantly. Previous crossovers reversed quickly as oil recovered. The question now is whether structural factors suggest something more durable. I'm not making predictions. Markets humble anyone who claims certainty. Prices could reverse tomorrow. But I'm observing that today, this crossover has structural characteristics that were not present during previous temporary anomalies. That observation is worth noting. If this crossover represents genuine structural change, what hidden signals might it contain? Hidden signal 1, value is migrating. Capital appears to be flowing toward tangible assets with permanence. When markets price a lasting metal equal to consumable energy, they're expressing a preference. Preservation over consumption. Permanence over temporary utility. This may reflect inflation concerns, currency instability fears, skepticism about paper financial assets, a desire for things that endure. Hidden signal 2, industrial reality is surfacing. Silver's industrial necessity is becoming impossible to ignore. Solar growth is accelerating structurally. Electronics proliferation is expanding structurally. Medical technology advancement continues structurally. These demand sources aren't cyclical, they're fundamental to modern civilization, and they require silver. The market may be finally acknowledging this reality. Hidden signal 3. Scarcity is being recognized. Silver appears to be receiving a scarcity premium. Oil reserves remain substantial. New extraction technologies keep finding resources. Peak oil predictions have been pushed back repeatedly for decades. Silver is genuinely different. Production has stagnated, ore grades are falling. Discoveries are rare. Above-ground inventories have been systematically depleted. The market may be assigning a premium for real scarcity versus perceived abundance. The connection. These signals interconnect and reinforce each other. Value migrating toward scarce permanent assets. Industrial necessity being acknowledged. Genuine scarcity being priced. Together, they suggest the crossover may reflect deep structural repricing rather than temporary noise, or not. Markets surprise everyone eventually. For honest analysis, I must present alternative perspectives. Alternative 1, random coincidence. Commodity prices reflect countless factors. Currencies, speculations, weather, geopolitics, random events. The crossover might simply be temporary factors coinciding. Market noise, not meaningful signal. Alternative 2, oil will rebound. Oil prices may be temporarily depressed. OPEC could announce production cuts. Geopolitical tensions could escalate. Economic growth could accelerate demand. If oil returns to $100 per barrel, the crossover vanishes. The signal disappears. Alternative 3. Silver is overheated. Silver might be experiencing speculative excess. Retail enthusiasm, social media momentum, hype divorced from fundamentals. If silver corrects sharply, the crossover reverses from the other direction. My honest assessment. These alternatives have merit. I don't dismiss them. Commodity markets are volatile. Temporary factors exist. The crossover could reverse next month. However, I find the structural arguments more compelling than in previous crossover moments. Industrial demand is rising structurally. Energy transition is happening structurally. Supply dynamics favor silver structurally. Structural factors typically persist longer than temporary factors. I'm not predicting specific outcomes. I'm observing that today's situation has characteristics that differ from previous temporary crossovers. Form your own conclusions. Let me bring together what we've uncovered. Right now, 1 ounce of silver costs approximately the same as, or more than, 1 full barrel of crude oil. A tiny coin you can hold between 2 fingers, versus 42 gallons of the commodity that powers human civilization. This is historically rare. It may reflect structural shifts in how markets value energy versus money, consumption versus preservation, temporary versus permanent, or it may reverse tomorrow. Markets are unpredictable, but the comparison itself reveals something hidden, something worth thinking about, something the mainstream financial media isn't discussing. Prices are signals. This signal is speaking loudly. The question is whether you're paying attention. That's what hidden wealth is about. Uncovering the signals, hiding in plain sight, seeing what others miss. If this shifted your perspective, subscribe. I expose market insights that mainstream media overlooks. Drop a comment. What does the silver oil crossover mean to you? Is silver overvalued? Is oil undervalued? Or is something bigger happening? Thanks for watching. This was educational content, not financial advice. Until next time, keep looking for what's hidden.